Hey, Crypto Hotep here with another trading video. This time we will be discussing another strategy that I have implemented in the way I'm trading. It's combining two systems into one and putting my little spin on it, if you will. Before we dive into it, I want to thank my sponsors. As you guys know, Coinbase is officially, or I am officially a partner of Coinbase, and they are sponsoring all of my videos here. So, Coinbase Advanced is the system and the platform that I use. Very good system here. Can see order books, trade history, can buy spot crypto with USDC or USD. You can even earn 5% on your sitting USDC as you wait for those sniper entries. You can obviously set limit market stop limit orders. And with that being said, if you do feel like supporting the channel, supporting Crypto Hotep, please feel free and use the link that's in the channel, and that's also in the description and also right here, because not only will you be supporting the channel, but you'll also be supporting me as well. With that being said, let us hop right in. Everything that I say is not financial advice at all. Please speak with a professional regarding crypto and other highly volatile assets before you dive into them. So, what we have, or what I've been conjuring up as the market's been kind of dipping down and things have gotten quiet on especially crypto Twitter, is just fine tuning my system and creating that edge. And that's the big thing with trading, is having an edge and performing that edge very consistently time over time. And as mostly everyone is aware, if you've been following me, is I am a retail trader with retail concepts. I use support and resistance. I have used supply and demand before as well, and just through back testing and also just some research that I've done, I've decided to combine the two systems of support and resistance as well as supply and demand and kind of flip it on its head here. So nothing too mind-blowing, but I figured I'd go through an example here of how I do kind of top-down analysis with crypto, could be stocks as well, or metals, anything like that. So the first thing is we go to our higher time frame. I always start at the higher time frame. It can give me a good visual of the trend. As you can see, we are in. Before I begin, sorry, the crypto or the asset that we will be charting now is the render token. Okay, so back to the daily. As you can see, we do have an uptrend. We are in uptrend. We are above the 100, which is this orange line here, and the 200 moving average, which is the blue line here. So we have an uptrend. That's check. That's one of the items on my checklist here. The next thing is we do draw out support and resistance levels still. So I'm still putting support and resistance levels in. And one of the differences is, instead of using the line chart and just plotting a ton of levels, I've basically just scrolled into my chart and then also scrolled down, and all of my support and resistance, I've given myself a rule that the support and resistance levels should be very noticeable within a matter of seconds. Like, I should see them fairly quickly. If I don't and I'm trying to squint, then they're not really there and I can't really see them. So here would be one. I would say here would be one. Let's say here would be one. Let's say here. Here. here, here, here. And that's enough for right now. And so with that being said, step 2 is done as well. So we've done basically the support levels, support and resistance levels, and we can adjust them as we scroll into the chart, just to get a better feel on where price is. And basically, those levels, I just want to see price get to those levels. It doesn't matter to me if they make a drastic move as of right now. I just want to see where price is attracted to. So now that we have that, now we're going to look for our buying area and our selling areas, or as people call them, supply and demand zones. And what I'm looking for are, they have a couple prerequisites. So one that stands out to me is right here. This move. We have a big impulse candle up, few candles after that, and then it looks like price is coming down here. Looks like it's retested this a couple times and maybe be exhausted. Now we're looking down. So my first eye goes to this level right here. So this would be a good supply and demand level. My first prerequisite is the supply or demand level, or buy area or sell area, has to align with support and resistance level. So our support and resistance level is right here. We mark that out. And it should align strictly to your supply and demand level. That's the first check. So as of right now, I can see right now that it does. We can see that this is very good at aligning with that level. The next is liquidity taken before this big move up? And what I mean is, for price to go up, it has to go down first. There has to be some sort of manipulation down first to grab all the stop orders, and then that's the fuel that pushes the price up. Here, you see this long wick down, gathered all of these stop losses, these lows here, and then boom, rocket ship up. So we're going to mark that out right here. I usually like to mark that, and I have a trend line tool that I'm using, and then we just mark it as such. Okay, that's the second prerequisite. The third is it has to break structure or change character. What do I mean? Well, we are in an uptrend, and with this latest impulse candle, we stayed in our uptrend and we broke this high right here. And we broke structure right here. And so we're going to label it as such. Okay? And basically what we mean is price tried to clear this, didn't clear it, came down, tried to clear it here, didn't clear it, tried to clear it here, didn't clear it, and then finally dipped down and then blasted right through this, breaking that structure here. Okay. The fourth prerequisite that we have is it has to deliver an imbalance or inefficiency, or for ICT traders, a fair value gap, whatever you want to call it. Me, I call it an imbalance. And I label the imbalance like this, just so I can remind myself that there is an imbalance here in price that needs to be filled. Do we know when it's going to be filled? No, but we can confirm that typically, not 100%, because nothing ever is 100%, that these inefficiencies or imbalances are filled with price. Price itself in any chart is very efficient, as you can see. You can see where price is, it's basically stair-stepping right here. Whenever there's an impulse candle and price just basically rocket ships up, there's an influx of buyers versus the sellers. So now price has to rebalance itself and has to fill this gap here. So I marked this out. The fourth prerequisite is done. So we have a imbalance that needs to be filled. And so we're going to mark this area here, which is the last bearish candle before the bullish move up. And me, I usually like to mark both the top wick, body, and the bottom wick. Now, some people just do the body and the bottom wick. Some people think this may be too big of a zone. Me personally, I've learned that this system works better when the entire candle is taken into account. So we have our daily buying area here. Okay. Now, what I do now is I typically go to the 1 hour. Now that we have our break of structure to the upside, imbalance, big impulse move up, liquidity taken before that impulse move up. Now we go to our 1 hour to see what price looks like on the 1 hour here. And if you are a bull, it looks fantastic here. Okay, so what I typically look for is I'm looking for the area where price began the bullish move up, and then a break of structure and a gap as well on the 1 hour. And sometimes I'll find two, such as in here. So here we have a break of structure right here, as well as a gap. And this is where that price kind of ballooned up from the 1 hour. So we have, I would call this a 1 hour zone here. Okay. And then here as well. Here we have break of structure right here, a gap right here, and then we have our last bearish candle right here. Okay, let me just adjust this here. Okay, there. Okay, so we have our zones, and we've refined our zones because they were so large down to a specific point. Okay, and there we go. Sorry about that. And we'll just drag these out as well. We'll drag these out. These are our 1 hour. All right. And so what we're expecting is from this point, we're looking at price essentially coming down into this area, particularly in the 1 hour buying areas, and then come back up. So we'll play this out here. I'm going to turn down the speed just a little bit, and we're going to see where we're looking at. Okay, so price taps into this 1 hour 1 hour buying area very cleanly, almost pinpoint accurate here. So as you can see here, your imbalance got filled as we thought it would, fully filled right here. And what we would want to see is price reject and move up. Now, if I'm looking at the chart here and I see this, a couple things I would mark up here. So just like we marked up everything on the bullish side, I do like to mark everything up on the bearish side. So starting here, we do have a change of character here. Okay. So we have a change of character where this low is being taken out on the downside. Okay. So it's not a break of structure. It's a change of character. And the difference is with a change of character, the current trend may change. That's hence the name. The break of structure is the trend continuing in that direction, just breaking the high or the most recent high. So here, we'll label this as your change of character. Okay. And then here is actually a break of structure. If I can find my tool. This is actually a break of structure since this closed. And another rule that I do have is for a change of character and a break of structure, for me, the candle body has to close through that line. So a lot of traders will use the candle wicks. If the candle wick closes through the line, then you're fine. Me, I don't like that because that's usually a false breakout. So I like when the whole candle closes above and the candle body. Okay, so we have change of character to the downside, break of structure to the downside. Let's see what we get here. What other things I should say that I would be marking up is a potential target here. So now that we have a break of structure to the downside, what caused that break of structure? Well, this point right here, I would say. So again, very similarly, like we did here with your daily buying zone, we have a daily selling zone right here, I would say. And your daily selling zone, we're going to mark this red. Your daily selling zone still has the same prerequisites as your daily buying zone. It still has to have the gap, which this does. It's a very small gap, but there is a gap there. This last bullish candle up, because remember, it's not bearish candle down, it's bullish candle up because you're going in the opposite direction. So the last bullish candle up has to clear liquidity out, which it did right here. And then now we're coming back down. So if I was taking this trade, I would probably set two orders, one in this 1 hour buying zone, and then one in this 1 hour buying zone. And I would potentially be targeting this daily zone right here. Let's see what we get here. Okay, so I would essentially be in this trade right now for both orders. And another confluence that you can add to your strategy that I typically do is I do incorporate the fib as well. If I'm having a tough time trying to decide where I'm going to take my trades and what 1 hour buying zones I'm going to use, because maybe there's several of them, not just two, then I just basically split my buying zone in half with the Fibonacci tool and just take that 50% mark of that Fibonacci tool and use that as my entry target. And so here we have a nice bullish reaction up. Let's see how this plays out. Okay, so essentially this would be my first target here, and I just knowing my current trading style, I may be out of this trade here after this tap into the daily zone, because more than likely my TP was below, maybe at like 945 or so. But let's continue this. Okay, we get back in. Okay, another bullish reaction. So great area. Again, pinpoint accuracy on the 1 hour zone. Look at that candle wick. Okay. Okay. Again, tapped into the daily zone, rejection. Let's see. Okay. And then now we're back into the daily zone. So a couple things, two things that I would keep in mind on my strategy with this is I'm one and done when it comes to the um, 1 hour and the daily buying zone. And what I mean is we have multiple taps in this daily zone here. After this, after this bullish move up and essentially my TP was hit, I'd be done. I'd be done with this zone. I'd be done with this trade. I would be done with render token until something happened um, with price. So this whole zone would be done with me. And the reason is typically how I see zones is zones usually wear down after some time. There's the common perception that orders are in the zone. As price taps into the zone, less orders or more orders are taken, then less are there, and the zone can become weak. Or the more times it gets taps on, the more times it has to, or the bigger chance it has to break down. Me personally, I just want to be the first person into that zone, and then also the first person out, and I want to be done with it. Because the more times that you take trades from that same zone, the less likely that trade will succeed. And I've been a part of that as well. So, if we were looking at that 50% mark, as I mentioned, and say, for instance, I think that 50% mark was somewhere around here. And say, for instance, we put a trade in and I put it below the low here. And I wanted, more than likely with me, I'd put it a little bit below our zone there. That's I would essentially be in this trade here, right here, and I'd be out. And that whole trade took maybe 2 days, 2 or 3 days, and I'd be done. That's it. And I'd be done with render. And that is over a 2.5 risk to reward on that trade alone. And that's not bad. So I'd be done with that, especially with the way the market's been going right now, with all the choppiness right now. That's a decent enough reward where I'd be good with that and I would be done. So that's one of the things that I'm incorporating and that I'm doing regularly. And this video was just to recap, this strategy that I'm using, and obviously to keep me honest, and to, journal my trade journey as well. So I'm going to cut this video. I know I'm kind of going over time here, but if this video was helpful at all, feel free to like, subscribe, comment. Let me know what you guys want to see. And thank you. And as always, happy trading.